Good morning, everyone, and thanks for tuning into this webinar on navigating uncertainty, the future of UK broking. I'm Dan King from Insurance Data Lab. Before I introduce today's lineup of panelists, I'm going to speak to Matt Scott about some new broker research that we've just published. Hi, Matt. Firstly, can you explain what this research is all about?
Sure, thanks, Dan, and morning, everyone. So this is our third year of analysing the financial performance of the UK broker market. Once again, this analysis is based on studying more than 100 company accounts, and that's across three key pillars of performance that we believe are the strongest indicators of financial success. So these are growth, profitability, and productivity, with brokers receiving a score under each of these pillars that are then combined to give an average broker performance rating. For growth, we've looked at the change in revenues and profits over the last 12 months. Profitability is calculated by looking at the 3-year EBITDA margin. And then for productivity, we've looked at staff costs as a percentage of turnover over the last 12 months and the turnover generated per employee. To be included in the analysis, a broker just needs to have filed full accounts at Companies House for each of the last 3 years, as well as reported positive revenues and had at least 10 members of staff.
Thanks, Matt. And what are the results telling us?
Well, it's good news, really, Dan, in that brokers have improved results across the board, with all three of those pillars improving year on year. And they've actually also reached an all-time high across all three of those pillars as well. So brokers received a record-breaking broker performance rating this year of 53.2%, and that's up more than 2 percentage points compared to last year. Growth was the strongest of the pillars, with an average rating of just under 54%, particularly driven by strong revenue growth there. So the average, the aggregate revenue position jumped by almost 10%, more than double the growth seen in the previous 2 years. But what's really encouraging is that productivity saw the biggest increase. And we think that that's really setting brokers up for even greater success in the future, with some strong foundations for continued profitable growth.
And what about individual brokers? Have you seen any particular standout performers?
Yeah, so our researchers recognised 10 broking firms that have all achieved outstanding financial performance, significantly outperforming their peers. And we're delighted to give each of these an Insurance Data Lab Gold Award. Top of our rankings for 2024 and the best performing broker in UK GI is General Insurance Brokers UK, with a market-leading rating of 73%. And this actually marks the second year running that they've won a gold award, after climbing up from 4th place last year. We've actually had a number of other serial award winners. So Roanoke International Brokers, JCB Insurance Services, and RAC Financial Services have all won 3 broking gold awards over the last 3 years. And then Avantia is a 2-time winner, while kind of new faces on our list are Berry Palmer and Lyle, Hugh J. Boswell, Investment Discounts Online, Holiday Extras, and at dayinsure.com.
Fantastic. Congratulations to all 10 firms. How can people find out more about the research?
So our broker performance report goes into more detail around the overall market performance and what the results look like for different sizes of broking firm. And it also includes an analysis of those top performing businesses I just mentioned. We will be sending out free digital versions of the report to everyone watching today via the next edition of our newsletter, which will come out next month. But if you can't wait that long, then the report is also available to download now on our website. The ratings for each of the individual firms covered by the analysis are also available to our subscribers through our Insight platform, and we can provide tailored reports for non-subscribers that compare performance of specific companies. And if anyone's interested in that, they can reach out via our website or drop me an email at matt@insurancedatalab.com.
Brilliant. Thanks for that, Matt. So I'd now like to introduce the rest of our panel. So please welcome Kelly Ogley, CEO for Howden Consumer and Local Commercial, and Partners and Chairman Stuart Reid. Before we get started, we'd like this discussion to be as interactive as possible. So please do submit any questions or comments you may have here in Zoom on the Q&A tab, and I'll put as many as possible to our panelists throughout the session. So to kick things off, Kelly, hello. Matt highlighted how well the brokers in our analysis have fared for financial performance. Do you find this surprising, or is it in line with what you'd expect?
I think given the market conditions, that we've experienced in a hard market, and I think now's the time for brokers more than ever, with new risk profiles coming in, whether that be underinsurance, cyber, I think clients need advice. So no, I'm not surprised. Whilst it's been tough out there in personal lines, I think the general broker market, it's booming, and I think it's because of that personal advice.
And Stuart, what's your take on the state of UK broking?
I think it's really strong. I think, your measurements prove that. I echo what Kelly said, let us not forget we've had hardening rates and the majority of brokers out there are commission led. So growth, can mean so much, can't it? But yeah, look, there's a reducing choice of brokers. The number of brokers has gone down substantially over the last 10 years. We are recessionary proof. I think our recession will be a light. I think everyone's agreed it's a light recession that we've had. But needless to say, the cost of living's gone up, insurance has gone up. So, there's a reason why that we're still seeing a lot of M&A going on, and there's a reason why, particularly from the US, there's still a huge amount of interest in this market, is that we've proved ourselves to be recessionary proof. We've proved ourselves to be a cash generative, generally annually renewable business. And that's relatively unique. So I think the opportunities now are absolutely fantastic. And yeah, it's great to see. It's absolutely great to see.
Right. Now, obviously, we can't talk about the broking market without talking about regulation. And there's been a fair bit of new legislation recently. Kelly, how are brokers coping with this, and what is Howden doing to kind of handle the increased workload?
Yeah, Dan, I think, we all agree. I think all good brokers agree that we all want fantastic client outcomes. So we can understand the regulator's concern about harm, and especially in the space of vulnerable clients, and value of products. I think from a Howden perspective, we've always aimed to delight our clients and ensure that they get great outcomes. But obviously, we're investing in our people, our teams, and our data so that we can evidence and ensure we're always meeting the requirements, but more so than that, delighting our clients with great outcomes.
And Stuart, you're never shy to talk about regulation. What's your take on the current regulatory landscape?
Well, let's say semi-shy, shall we? Yeah, look, there's been a lot of change. Our industry is better for the regulation that has from being regulated, frankly. I've been in the business long enough to remember when it wasn't regulated and it was a very different industry to it is now. And I think in the main, in the whole, I think regulation has been good. I think people are better educated. I think people understand businesses are more professional, serve their clients very well. That said, we mustn't forget that a significant minority, if not majority, of broking businesses in the UK are 10 people and below. And therefore, you've got small businesses that are tackling this new regime, this new way of working, this new way of reporting, should I call it, at a time where they've got to service clients, where prices are going up, et cetera, et cetera. So, the larger firms that have their specialist compliance risk units, treasury units, call it what you will, are able to deal with this and soak it up a little bit easier, perhaps, than some of those small brokers. So it's the impact on those small brokers that gives me cause for concern, where they have a day job and they're trying to do this. I mean, I think the industry as a whole would say that there's been a lot of change. We're getting used to it. We understand it. We would like to use a football analogy, perhaps, for the FCA to put their foot on the ball for a little while and let us just get used to this new era, and the ramifications of it, gap, etc., and just see how it goes. Anything new, anything heavy coming in is just going to cause, I think, tremendous upset. So hopefully the FCA are listening, and we see how the implementation of Consumer Duty and audit brought. How it goes, basically.
That's true. Even I understand that football analogy.
Good, good.
And Matt, what advice would you have for any brokers that may be struggling with this increased regulatory burden, particularly, as Stu says, those smaller brokers?
Yeah, I mean, kind of, regulation and kind of the regulatory burden has been a, hot topic for years. I know BEIB has always kind of been saying that the industry is over-regulated, but that has grown recently as well. And as Stuart was saying, putting the foot on the ball is probably something that everyone would be calling for. I think those smaller brokers that, as Stuart said, I'd echo that, they don't have the resources. I think kind of being part of a network for some can help. They can provide additional support around kind of placement, for example, or just around additional resources and advice. But obviously that's not going to be a solution for everyone. Not everyone will want to be part of a network, for example. And I think it's all being smart about how you manage the compliance and having a plan of action that kind of allows you to, as Stu said, manage the day job of actually broking alongside kind of the compliance side of things. And I think data will be a big part of that, and having the right data strategy to properly evaluate and kind of insurer partners properly report on the business you're doing. I think that's key. And I think it's about kind of, sitting down and making sure you have the right plan of action around that, and then going out and enacting it. And, so we look at things like kind of underwriting results, solvency positions, complaints handling, and customer and broker experience. And I think that kind of thing, alongside how the actual product's performing, that gives you really, I suppose, a 360-degree view of, how your insurers are performing and how your business is performing. That can then be used to help inform decisions and inform your reporting. So I think making best use of technology and best use of the data that's out there is key, really, and having that plan to properly use it, that you can then go out and deploy with a bit more ease rather than just kind of ad hoc trying to handle it on the fly.
Great, thank you. And Stuart, what areas do you think brokers should be looking at when assessing their insurer partners through the lens of consumer duty?
Well, basically, what enables them to give the consumer the duty, the consumer the service that they want to, that they need to. It will come as no great shock to all of you here, and I'm guessing a lot of the people who are linking in today to this. The service from insurers is tremendously poor at the moment. I mean, as brokers, we always sort of bash our suppliers, and sometimes very unfairly, but and a generalization is always dangerous. But at one of the businesses I'm involved with, one of the senior executives said said basically that if he gave his clients a service that insurers give him, he wouldn't have any clients. That's a heck of an indictment. And the more I speak, the more I go around the country and meet people, the more I hear, to insurers not getting back on new business. I mean, that's their lifeblood. But what worries me more than most is the amount of complaints that are coming around about claims. Claims is the shop window, to use that old overused phrase. If insurers can't get the claims right, then we really are in a lot of trouble. And I think 68% of the FOS complaints and claims, and look, claims are a very emotive issue. There will always be issues with claims, but we've got to demand more. I think the rise of the MGAs are doing so spectacularly well. The reason for the rise of the MGAs is in part because insurers are in a right old mess. So it's to use those that can help you give the service that your client demands, needs, and should have. That's it.
Okay, thank you. And Kelly, is there anything in particular that Howden looks at around this kind of stuff, around assessing insurer partners and through that lens of consumer duty?
I think just linking back to some of Stu's points, it's making sure that, they have looked at the products with the client at the heart of everything that they're doing. So designing the product, the service proposition, and as Stu says, we all use the phrase claims as our shop window. As an industry, we need to be absolutely delighting clients in terms of fairness of claim settlement, speed of claim settlement, responsiveness. And actually, this is where the regulation does help, because with our consumer duty dashboards, we can look at our insurer partners and just see who is being responsive, who does have great settlement rates, and anybody that doesn't, we can dig into. So it's really just making sure that the terms are fair, they're very clear and transparent in what they're covering. And then the big thing, as Stu said, is that claim settlement, making sure at the point the client needs us most, both the broker and the insurer partner are there.
Great, thank you. So before we move on to our next topic, just a reminder that you can submit questions to our panel through the Q&A function. So please do make use of that and put Stu and Kelly on the spot if you'd like to, or Matt or me. So let's move on now and let's get political. As we all know, the general election is on the horizon. Stuart, what impact do you think the anticipated change of government could have on the broking market?
Always very dangerous to look to the future, isn't it? Particularly with a change of government. But one would hope that the oversight of regulation doesn't change too much, certainly adversely, as I would call it. I can hope for that. I do think that we are, as an industry, regulated more than most. And I'm not sure that the risk of our industry is such that it deserves that. And I guess what I would say, and coming back perhaps to that point about smaller brokers, networks, I think, Matt, networks do work for some, and I know a lot of people are part of the networks. And I think the point is that because we are going to be regulated by data rather than by visit, then it's important that we support our associations, trade bodies, call it what you will, such as BIBA, because they're in a position to go into government to talk about changes, be it regulation, be it competitiveness, be it, call it what you will. And our support of those trade organizations is absolutely important. So we have one strong voice, because our interaction directly with the FCA as small brokers out there, small to medium-sized brokers, is relatively non-existent outside of the data provision.
And just to add that, Stu, I think, working together with, as you say, the likes of BIBA, if we've got an open door with the government, looking at how we can help mitigate risk in the future. So, we can all see the spiraling cost in car, home and property, and there's nothing that says that's going to slow down. We need to help future consumers. So, whether that be speed calming in inner cities, or whether that be difference in where we build on floodplains. Yeah. So I think having that voice with the government through the trade bodies, I think, just to help consumers 3, 4, 5 years on, to make sure insurance is still affordable and accessible to all.
Yeah, if I may just add a little thing, there was a story I heard yesterday of an international broker considering shutting down their UK office because of the burden of the regulation and various other things, because it was the most costly territory to do business in. It goes beyond the individual regulation of each business. It goes to talking about the competitiveness, which the government have been talking about and wanting to do. I'm sure Labour, if Labour get in, if there is a change of government, they will probably hopefully continue to do the same.
Okay, thank you. Matt, how do you think a potential change in government could impact brokers?
Yeah, I mean, I just think it gives us all more uncertainty, really. No one really knows kind of what a Labour government, assuming, that's what we do end up getting, would do around insurance and regulation. I don't think anyone knows all the plans, or even if it stayed as a Tory government either. I think kind of there can be so much change around election time, and that is tough to manage. You kind of mentioned kind of motor pricing there, Kelly. I think the one thing that we can probably say is that the FCA is unlikely to become a price regulator, regardless of whichever kind of government we end up with. But it is hard to tell what will come out of the election for the insurance industry. I think Solvency UK could see some capital freed up for insurers to invest in different areas, kind of infrastructure being a big one, but I think it would also allow them to invest a bit more in their own service levels and capabilities. And, as Stuart was saying, that the level we're at that the moment in terms of kind of service to brokers, that can only be a good thing if it does end up coming through and good for customers as well. But really, at this point, it's hard to tell the full impact, and we won't know that for quite some time.
Thanks. And regardless of any change in government, we've obviously been living through an era of economic uncertainty lately, and that's unlikely to change anytime soon, whoever the government is. So, Stuart, do you have any advice for brokers who are trying to plan ahead in around that kind of environment?
Well, I suppose it's just good business sense, isn't it? we've had a hard market for a while. That will ease. I think it's already beginning to ease a little bit in the first types of policy that had rating increases. So that's not something you can depend upon. For me, running a good brokerage is being a good specialist, even if you're not a specialist. And I'll explain that. Commercial, just general commercial business can be a specialism. Having the right people, having them educated in what they're doing, having, in some cases, local knowledge. A lot of the big brokers that don't have offices in the small regions, being local, knowing the local town or whatever. Being specialist with your insurer, your capacity provider, call it what you will, setting yourself apart from your competition in so many ways, and providing, the service that you promised at the start, making sure those claims are settled within in short order. And if you can't do it yourself, look to professionals who can do it for you. So that's I suppose my clarion call. If you're a specialist in anything, you stand a much better chance than a generalist in everything.
And Stuart, how is the current landscape affecting M&A activity? Is there anything you're seeing there when it comes to acquisitions?
Well, I'm sure Kelly will agree. It's madness out there. Everyone's after everybody. And that speaks volumes, doesn't it? It's still an extremely attractive sector. People need insurance. We wouldn't be here today if it weren't for insurance. In this office or whatever. I think the opportunities are absolutely fantastic. And what's happened? Forgive me, Kelly, but what's happened is some brokers have got very, very big. And there's a big hole in that medium area. And I think in that medium area, you can provide perhaps some of the best service, not all. Like some of the bigger brokers are very good at what they do. But in that mid-market, there's a massive gap. And I think for some of those smaller brokers to move up into that mid area, but there's a fantastic opportunity for those that want to do it. I also think that people starting up their own businesses, however difficult it might sound and however many barriers there are to entry, I think actually I would buy a business to start if I could afford it, or buy into a business to start that would have its agencies and have its IT and everything else. I genuinely believe the opportunities for the small to medium-sized broker are better now than they ever than they have been in many, many, many years, because there ain't much competition in that mid-market. And get into there, and you become quite a rarity. And what happens with rarity? You get high value.
Okay, thank you. And Kelly, I know obviously you're not at Howden Group, you're at Howden Local and Consumer Commercial, but Howden has obviously been very active in the M&A space. Is there anything you'd like to add to what Stu said in terms of what Howden is seeing?
I think I just agree. I've acquired businesses for over 20 years now, and every budgeting cycle somebody says it's going to slow down. And 20 years on, we're still seeing, as you said, a very active market. So despite sort of the contraction in the broker market, there's always new entrants, and 5 years later, 10 years later, they then come up for sale. So no, I think it's still very active out there. What we are seeing in consumer and local commercial is some of those mid-market brokers that Stu's talked about in the commercial space wanting to specialise in commercial and divest to personal lines because of how tough it is. And I think you really need to be a specialist in personal lines to be flourishing. So we are seeing some commercial brokers just saying, look, I'm going to focus here and divest to personal lines.
Yeah.
And in answer to your question in terms of the economic position and future of brokers, I think it's controllables. Have an eye on the macroeconomic environment, understand what's going on worldwide, and reacting to it, but knowing that you can't control it, and looking at how we can control, what can we control, and that is delighting our clients, working with our clients, ensuring all of their risks, and getting that repeat business. So being aware of the external environment, but actually controlling the controllables.
Thanks. And Matt, any thoughts to add here?
Yeah, the data we've looked at, we've seen kind of a slight slowdown in activity, but I'd probably say that's more of a temporary dip than actual kind of fall off in pace. I think, the slowdown in M&A has been talked about for years and it's yet to happen. And to be honest, I don't see it happening anytime soon. The change of government, if we have it, could actually see kind of people accelerate plans to sell, take advantage of, the current tax regime. And I think the big thing is, there's still a lot of, you know, good businesses out there. You know, our research has shown that, and there's money out there as well. You know, private equity, I don't think is going away anytime soon. And, you know, then if you look overseas, particularly from the US, there's a lot of appetite for kind of either moving over here or extending kind of footprint. You know, Stuart was saying broking's cash generative, recession proof, and that's always going to be appealing for people looking to get a return on their investment. And I would say, you know, it's all about, you know, if you're looking to having a good business that brings additional value. So whether that's, you know, a particular scale or a regional presence, or, you know, as Kelly and Stuart were talking about, that kind of specialism in a particular business line or area of a market, I think those types of businesses that are delivering good results and growing are going to be the ones that are really able to command buyers and kind of a strong valuation too.
Yeah, one thing I think that gets missed, and I think it's an important point, is that I think there will be a very, very significant minority of people who are working for businesses they never chose to work for because of the M&A. And as such, I think that's a fantastic opportunity for smaller brokers to get people away from these big monoliths who necessarily, it's a very different organization. Cause and effect is a longer brief. And maybe repopulate some of those smaller brokers to help them grow. So there's a massive opportunity, I think, there with the labour force.
Great, thank you. So we've had a few questions come in. Please do keep them coming. What I'm going to ask here, Matt, I think I'll start with you on this one. Someone said that with so many complaints about the claims experience, which is something that Stu touched on earlier, does the industry need to do more to better explain coverage and what is and isn't included in a policy, particularly with the rise of these kind of essentials policies?
Yeah, I think definitely there's a big problem with kind of the understanding gap in between, you know, what customers expect to be covered by a policy and, you know, what actually is included. And I think that potentially could be a big reason behind why we are seeing so many claims complaints reaching the ombudsman. It's people thinking something's covered when it's not. And while, you know, kind of some insurers may say, well, if it's not covered, it's not covered. You know, there's nothing we can do about that. I think the real problem is that understanding, and people need to know what is covered and what isn't, and that needs to be explained properly. You know, before a policy is even bought. Once it's been bought, it's too late to have that. So I think that is a big issue, and I think more can be done. I think sometimes it's a case of kind of insurers want to get people through the quote process as quickly as possible, and they understand that, you know, people switch off if there's too many questions or too much kind of jargon. But I think sometimes it's a case of slowing down to properly explain things in a kind of short, coherent way so that they can understand what they're buying before they've actually paid for it. I think that would help a lot. But we still see it's over a third, kind of heading towards 40% sometimes, or higher in certain business lines, of you know, complaints actually upheld by the ombudsman. So that's not the only problem. There are issues around insurers not delivering what's expected of them and what they should be providing. So I think, you know, the focus on claims is still needed. It's not all about that understanding. And I think while, you know, with those figures so high, I think there is a real risk of there being a bit of a reputational crisis as well. And that could only hurt the industry, and something that they need to be aware of. With the essentials policies, I think they are great for kind of offering cheaper alternatives. But again, they need to be properly explained. And if there is something that's usually part of a motor policy, for example, that is excluded to help keep that price down, that needs to be front and center explained. People can't expect that they had last year if they're paying 30% less because it's kind of a lower level of cover.
I totally agree with that, Matt. You know, there's a role for everything in our industry, but this is where I do think the brokers come to a fore. We're explaining those terms and conditions, explaining those exclusions, and offering choice. So that, you know, some clients, you know, at this point in time with the cost of living crisis, you know, they want to, you know, maybe strip out some benefit, but do they really understand what it is they're stripping out and the consequences? You know, if you haven't got windscreen cover, how many consumers actually understand the cost of windscreen cover. I go back to my original broken days, I think it was going to be a couple of £100, and it's, often upwards of 800 plus. So I think that's where brokers compared to directs can really add value. And this is where it does speak to consumer duty. So whilst, we've talked about regulation and, often the phrase a burden of regulation, that consumer understanding is absolutely key, so that if they buy something, it's not buyer beware. They're buying something knowing that they've actively chosen to take cover out.
Yeah, if I may add a couple of things. I work for a specialist claims company. I'm not here to sort of promote the companies I work with, but basically, they provide a service for brokers to outsource claims to, and they provide fully qualified people to put to deal with the claims. I think their rise is absolutely due to how difficult it is to deal with claims, to deal with insurers. But that's my plug. But one thing which I think gets missed, I wrote about recently, is underinsurance. With everything becoming so expensive now, particularly in building materials and timing and all that sort of stuff. I think there was a broker survey, Matt, Dan, you might know it, but there was a broker survey. I think 75 brokers said that they felt that 75% of their clients were probably underinsured. Well, that's a frightening statistic, isn't it? Because that's only going to be a lot of pain and anguish coming at a time of a claim. I did like it that the brokers were suggesting that it was the insurer's fault because they weren't providing them with the data to be able to tell their clients that they're underinsured. I think that's a stretch. I don't think it's the insurer's fault. I think it's the broker's fault. So one thing I would suggest is that if you feel your clients are underinsured, don't just accept it. You make sure that you get in there and tell them why you think that, and hopefully get them to do something about it. But I understand people are underinsured because they don't want to pay extra premium when the premium's going up anyway. So that could be a ticking time bomb.
Yeah, I totally agree with you that, Stu. We see this all the time, and we're really working with our clients to promote surveys and explaining the consequences of underinsurance. As a consumer, we shouldn't expect them to understand the consequence of it. And none of them think that they're going to have a total loss. They think they might have a minor risk event, and therefore it'll be covered because the total sum insured's okay. So again, that's where I think the broker can really make a difference by explaining that we think they're underinsured, explaining the solutions to establishing and investigating it at a relatively modest cost. And we find once we explain that to our clients, not all of them, but the majority of them will go down that route, because as you say, otherwise we are sitting on a ticking time bomb.
I'll tell you just, and I will, very brief thing. I was told the other day that on high net worth and mid net worth, some insurers now are doing post-loss surveys to check underinsurance. And I hadn't heard that for many years. So I think that speaks volumes. So that is something that people must take very, very seriously, I think.
Interesting. Thank you. So another question that's come in is, with the increasing costs to consumers, what are firms doing to develop innovative products to keep products affordable? I don't know if Stuart or Kelly, one of you wants to take that.
I think some of it goes to the point I was making before about us as an industry working together with the government on what are the key things that are increasing the cost of insurance. Some of it, if you take cars in inner cities, is the frequency. So what can we do? So not just the industry, but what can we do collectively to reduce the frequency of claims in inner cities? And then I think in terms of innovation, we've got paramedics, we've also got driving data in terms of telematics. So it's trying to, if I look at Canada, telematics is much more of the norm than it is in the UK. So how do we make it much more socially acceptable that people do look at some of these things that does help reduce the cost? So I think it's tough out there at the moment for consumers. I think there's, we've got the cost of living crisis, we've got lots of bills going up, and unfortunately insurance is part of that. So I think it's just working collectively just to look at what other solutions are out there. But again, I will go back to speaking to a broker. It does mean we've got choice, and we can help them with, do they take some coverage out to reduce the cost, or perversely, some of our clients go the opposite way and want to add coverage in, so they've got guarantee if a risk event does happen.
Okay,
yeah,
thanks.
I mean, ultimately, that's our job, isn't it, as brokers? To get the best we can at a competitive premium for as comprehensive a cover as the client requires. you know, you should never take one example, but my son phoned me the other day. His insurance has gone up 40% on his household. He hasn't changed his sums insured. Is that fair? Well, ask your broker, you know, if you're with a broker, make sure that they've had a look around, that they've looked at the market. Innovation, as Kelly was suggesting, innovation is great. You know, there are, you know, different ways to insure for flood and various other things that I'm sure most people will know about, which I think are very exciting. And, you know, I'm involved with a few MGAs and brokers in the insurtech space who are looking at things very differently. And they've had a tough time of it, you know, to launch new products without, you know, clients to start with is a much longer and costlier road than many imagined. But many of them will succeed by providing the clients with what they want, not with what the insurers think they want. And there is a distinct difference sometimes between those two. So I think there's a lot of innovation. I think there's a lot of specialism, and I think there's a lot of good service out there. But ultimately, a broker is there to provide exactly what what the questioner asked, I think, and they should do their job.
And I think
just looking at, you know, one of the metrics you talked about before, Matt, was productivity. So with the increased use of tech, data and AI, I think, you know, whilst we always want to be able to give advice, give service to our clients, we can augment that service and improve our client journeys and our effectiveness by embracing tech, data and AI, just to, you know, remove some of those some of those jobs that aren't adding value that we could automate. And obviously, the more we improve our productivity, the more then in terms of value to the clients we can give back.
And I think kind of if you look at kind of the way that maybe the cost of living crisis and things like that are changing consumer behavior as well, I think that's going to drive a lot of innovation. So if you look at the mobility market, for example, fewer people are kind of going to have their own cars. It's going to be a lot more kind of car sharing, ride sharing, and that kind of thing. And I think that's going to drive a lot of innovation in that space as well, with new products coming out that can cover those new types of risks that maybe are going to, you know, weren't around kind of a few years ago. I think that will help drive innovation as well. And off that, I think we'll see kind of offshoots of products that are maybe there for the all-time driver, for example, that offer different solutions. And I think that could really help the industry and, you know, improve choice for consumers as well.
Thanks. We've got another question that's come in as well, which I'm not sure if I fully understand it, but I'm going to ask it anyway and hope one of you guys do, which is, what are your impressions on the development of risk and control in supporting versus hampering sustained business growth? Yeah, exactly, Stu. That's what I thought.
Does you have a go at that?
Go? If not, we can just brush over it and move on.
I'm guessing they're talking about the increased pace of change in regulation, which I think we've touched on earlier. And I think, you know, Stu quite rightly said, you know, I'm 38 years into the industry. It needed regulation. It's been a good thing. You know, does it go too far? I think we're in a good place at the moment, but, you know, I'll go with Stu's. Let's put the foot on the ball and let's bake in the changes that we've made.
Yeah. Okay.
Yeah,
thanks.
it's such a subject. It gets talked about a lot, doesn't it?
Yeah.
It's, you know, we are where we are. I think we've probably answered that.
Yeah. So let's look to the future. Stuart, I think I know the answer to this from what you said earlier, but are you optimistic? What are the big opportunities and challenges you see for brokers over the next 12 months or so?
I'm hugely optimistic, you know, for the reasons I've already mentioned. It is not easy to set up your own business. I was on the FCA website seeing how you do it and how you get approved and your business plan and your loan from a bank, you know, and all that sort of stuff. So it's not easy by any means. But there are a lot of people out there that would like to make their own mistakes. That's certainly why I set up my own business, to make my own mistakes, to be a success, not to do what other people were saying. The opportunities are fantastic. Competition out there is reducing. Competition out there is very different. I think some of those larger brokers might start buying their other larger brokers, so they'll have their attention span elsewhere. And as I said, I think in the small to medium-sized business, there's an opportunity to be as close as possible to your clients and give the service that they desperately need. It'll be a great time. It'll be a great time to do that sort of stuff. The opportunities are plentiful.
And Kelly, what are your thoughts on the future?
Yeah, I'm forever the optimist. I totally agree with Stu. I go back to, I mentioned before, 38 years into the industry. You look at the changes that have happened over that time. Yeah, it's been phenomenal. Yeah, brokers have thrived and continue to thrive. So I think there's always going to be a place for us. I think it's been very, very tough in the personalised market, as many of the viewers will attest to over the last 12 to 18 months. Certainly from a car perspective, that's going to settle a bit. We've got a little bit further to go in home. We're still not quite earning out in home. But longer term, absolutely. We've touched on tech, data, and AI. I think it's a really exciting change for the industry. Gone are the days of everything being manual and files and etc. So I think we need to just reposition ourselves in the consumer's mind, and certainly in the employer, as an employer proposition, that we're not as dull and boring as most people think we are. We're not there with old-fashioned files and old-fashioned desks in little brokerages out in the regions. Yes, we're in the regions, but we're modern, we're tech and data enabled, and it's really exciting. And I will have to use my phrase, it is a sexy industry.
Matt, any other thoughts on the future and the sexiness of UK broking?
Yeah, I mean, I think the future's bright for brokers. As Kelly and Stuart have said, foundations are really strong. Should be a lot of optimism. There's going to be challenges, of course. There will be, regulations. It's not going to be going away anytime soon. There's a load of uncertainty, as the title of this, webinar suggests. But I think the brokers that are smart about how they go about doing business, embracing new data, new technology, as Kelly was saying, is going to be key. And I think the ones that are going to be really thrive are going to be those that properly go and map out their long-term strategic objectives. I think you need to have that long-term plan about where you're going to focus on the market, where your specialism is going to be, but also you have to remain agile and be able to react to changes in the market. Try and be, proactive as well. But there are going to be things that come along that you're just not expecting, and being able to react quickly with agility, I think that's going to be key, and that's going to be the thing that separates the success stories out there.
Yeah, and just one last thing. Don't forget it's a people business as well. I absolutely support what Kelly was saying in AI and data and it absolutely will transform our business, I'm sure, in many ways. But we're a people business. We've got this struggle about hybrid working. Do people come in? As far as I'm concerned, if you can, get in as much as you can. If you want that promotion, people are going to find it very difficult if they don't know you. They haven't built up an element of trust. The relationship with your suppliers, get out, see the insurers, build a relationship, find someone you can trust, find someone who gives the service that you want. It's still really, really a people business, not just to the clients, but to our suppliers and internally within your own business. Do not forget that. It's such an important part of what we do.
I couldn't agree with that more, Stu. I think, anything we do with tech and data should only augment and support our people-based business. And, we always have been, and I think hopefully always will be, built on relationships. And with that, one of the big words in insurance is trust, whether that be trust with the clients or trust with our insurer partners. That can only be, built on a foundation of great communication, great engagement, and great relationships.
Great, thanks, Kelly and Stuart. We have got one more question, and as we've got a bit of time, I'm going to ask it, but it is, I'm afraid, about regulation again. It's such a big topic, obviously, and this question is, what do you make of the FCA's concerns around premium finance? How much focus should brokers give to the value it offers?
Well, I think the FCA was in front of some government committee recently, and there is a focus on premium finance, and they were asked, about it. And I think the FCA said that we mustn't forget, well, I'm trying to get this right, we mustn't forget that insurance companies out there aren't huge profitable businesses. If we tinker too much with the premium finance that insurers offer, there is a law of unintended consequence that premiums may go up. And it was very refreshing for me to hear that argument from our regulator, because it might not be right, but it's correct. Premium finance is a way of people to be able to afford and spread over a period at hopefully competitive interest rates, something they would be unable to afford were they to pay it up front. What's not to like? There are some institutional issues where maybe some of the charges are higher than they could or should be, and it's not a perfect world, but to outlaw premium finance in our industry would be absolutely bizarre. And I'm not suggesting that anyone is saying that, but it's an important part of what we do. Is it 100% correct? No. It's much like, forgive me, gap insurance. Is it perfectly formed? Absolutely not. Is there a need for it? Absolutely, yes. And we as brokers, it's our job to find solutions to people, be it gap or be it premium finance. And those are both tools we still need.
Thanks, Stuart. Matt or Kelly, would you like to add anything to that?
I think really just to reiterate some of Stu's points that there's a product there and there's a value to that product and there's a consumer need for that product. That said, we need to make sure that everyone in the industry and outside of broking as well is providing fair value. And when we look at it, there are a range in charges, and I think probably what the regulator is looking at is the extremes. As with most things in regulation, it's the extremes. So yes, there's a fantastic product there. There's definitely a client need for it, but equally, there does have to be fair value.
Yeah, excellent. Well, that's probably a nice note to end on. So, Kelly, that's the last word. Thank you very much for bringing us to the end of today's session. Thanks again to Kelly and Stuart for joining Matt and I today. And thanks to all of you for tuning in. Look out for the broker performance report that we recently published. It will be included in our next email newsletter. And just to close on, here at Insurance Data Lab, we track the performance of insurers, brokers, and MGAs across a range of metrics, incorporating some of the things we've talked about today, like customer experience, claims, complaints handling. We also look at solvency and underwriting and financial results, which are all available on our Insight platform. And if anybody would like to have a look at that platform, we do offer free trials. So if you'd like to take advantage of that or would like to find out more, then just email me at dan@insurancedatalab.com. So thanks again for watching, and from Matt and me, goodbye for now.
Thanks.
Cheers, thanks.